Hi, this is Zach Mayer with the Bulletin Board Heroes here at Zach's Traders Cafe for Tuesday, the 10th of December, brought to you in association with anewfn.com. Starting on with the FTSE 100, which is still in that range between basically 8,300 and 8,400, I suppose, at the moment, the post-spring resistance for this market. On the downside, we fear that we could have to test the 50-day moving average, still rising there at around 82.30. The good news at the moment is got the 50 and 200-day lines both rising, so hopefully any consolidation will come in, or any support will come in at or above that 50-day line. The easiest thing, I suppose, at the moment would just be to wait for an end-of-day close through 8,400 if we actually get one, and then look to the top of that rising trend channel from this time last year at 8,600 as a year-end target if we get into a festive mood. But the worst on the downside currently seen as being that 50-day line. Moving on to the DAX, which is behaving rather better than the FTSE, and here you can see it's still trying to get up to the top of that rising trend channel from this time last year. That resistance line now heading for 20,800, and we're looking for that while we remain above the floor of the latest gap there, just above 20,000, so quite simple there at the moment. On to the Dow, which has given the impression of rolling over a bit, maybe some of the tech stocks hurting the atmosphere across the pond as well. We're back below the initial November resistance there at around 44,500, and the longer we stay below that, the greater the chance of at least a move back down to 44,000, or even as low as the 50-day line there, 43,200. But hopefully will actually bounce somewhere near current levels, given that that was the old resistance last month. Moving on to Bitcoin, which is continuing its jiggery-pokery just below the 100,000 area. There's an uptrend line there from the early part of last month. That's currently around 95,000, so above 95,000, still looking for 103,000 now, which is the resistance line projection from April. Best case by the end of next month is we can head up to 120,000, although it has to be admitted at the moment we're looking a little bit tired after our big rally back in November. Moving on to gold, and here the picture rather better, or slightly better than it was over the recent past, in the sense that we've broken back above the 50-day line, which is now starting to rise again. And yesterday's price action, very strong, opening at the low, closing at the high above that 50-day moving average. So looking with the 2750 area, at least as an initial target, given the hammer candle that we had last week and the good start that we had to the beginning of this week. RSI back above neutral 50 as well, 53, so that also helps the cause. Moving on to the stocks, and starting off with Ananda, which looks as though it's noticed that it's in the run-up to a golden cross there, 50 and 200-day lines rising trend channel there from this time last year, heading up to the 0.55 area, and we're looking for that by the end of next month, helped along by the latest positive MRX1 news. Moving on to Asiamet, and this one also looks as though it's in a better condition than it has been for quite a while. We've got the 50-day line rising. We've broken the top of that falling trend channel there at 0.7 pence, and looking for the 200-day moving average at 0.82 by the end of this month. You can see that so far we've either had flat or positive candles over the course of December. On to a requested stock, and it's CapEx, and looking a little bit better here as well, in the sense that we've broken above the 50-day line, support coming in at 0.15 today, and looking for 0.19 on the 200-day moving average over the next week or so, and hopefully this will be the start of a fresh turnaround. Best case is that we're up to 0.28 by the end of next month, while we remain above the floor of the channel there, 0.14. On to a stock which I haven't looked at for quite a while, and you'll see from the chart perhaps why that is the case. But here, W-shaped reversal here at Cambridge Cognition, breaking the middle of the W shape that we got there. It's a bear trap rebound as well from below October and November support there at 28 pence, and looking for the shares to head up to as high as the 200-day line through 40 pence by the end of this month, if this is the indeed the turnaround signal. Another stock which is trying to make progress is Dekel. I think I had November update today. The shares have gapped up. We've got a rising trend channel base, rising 50 and 200-day lines as well. So 1.9 the target here, hopefully by the end of this month. while we remain above the old June resistance at 1.45 pence. Nice to see fusion antibodies doing well at the moment. We've got a V-shaped bull flag, as I call it, so a rally and then pull back and then back up again. And initial target, well, the second target here actually was 7 pence, which we're looking for hopefully over the next day or two, while we're above 5 pence. And after that, I suppose the picture rather more open in terms of the upside. You've got 8 to 9 pence there, which is basically 1 year resistance for the shares. But with the rising 50 and 200 day lines, it looks like we've turned around in a U shape and will visit the top of the U through 9 pence over the next 4 to 6 weeks or even sooner, while we're above 5 pence. Another similar chart actually is Ferro-Alloy with the rally and then the pullback. So this one actually helped along by the way that we also have the 50 and 200 day lines rising, so it suggests we're going to a golden cross. Initial target here was 7.7 pence, which was obviously exceeded. Looking for that again, and helped along by the gap higher, the unfilled gap to the upside that we had last week. The target above 7.5 pence as high as 11 or 12 by the end of next month, helped by the company's now famous carbon black substitute. Moving on to a stock which I've never covered before and may never cover again, but here we have Tortilla Mexican Grill. And here the picture is that we've got rising 50 and 200 day lines. We've gapped up through recent resistance around 53 pence, and at least while we're above the 200 day moving average at 52, and maybe one could allow down to the 50 day line at around 50 pence. Looking for the top of the range and the top of that rising trend channel as high as 64 pence. Seems rather unlikely, but that is the charting configuration at the moment. I've covered Orosur quite a few times in the recent past, and the reason is that we've got the 50 and 200 day lines rising here, so it looks as though this could be a lasting turnaround. Unfilled gaps to the upside, so it looks like a re-rate as well, and holding the best of recent gains as well. Current position is that we managed to fill that gap from April 2023 at 6 3/4 pence, and above that, looking for the shares to head higher, quite naturally, up to as high as the previous resistance for the shares, which was basically in the 10 pence area, hoping for that by the end of next month. So 10 pence is basically last year's resistance zone. Ideally, we stay above 6 pence, which is the top of the 2024 range. Moving along to a stock which may finally be breaking out after a long incubation period, and it's Panthera. Obviously, here we always have the hope that we'll have some big news, and the top of the channel here as high as 13 pence, and we're looking for that while we remain above the 50 day line at 7 pence, but just looks as though we have had a bit of a breakout. On to Pantheon, which revealed a new discovery today, and just missed our target line there, the June resistance line there at 30 pence. Hopefully we'll have another go at it, especially while we're above recent or initial December resistance at 25 pence. Ultimately looking for the shares to head as high as 43 pence, the upper parallel of the rising trend channel base that we've had there since back in July. What will be interesting here is if we can get the 200 day line to start rising. I suppose if you look closely, maybe it already is. On to the last two. The first one is another one that I don't normally look at, which is Solid State. And here it looks like we've got a W-shaped turnaround and bear trap rebound from the lows, so below £1.10. The longer we stay above yesterday's resistance at £1.23, the greater the chance of the shares at least heading to the bottom of last month's gap at £1.55. But the key here is holding yesterday's high. Finishing off with a stock which I've covered a couple of times in the recent past, which is StreaksAI, and living up to its name with the sharp move to the upside. We're looking for 1.5 pence, hopefully by the end of this month, or at least by the end of next month, while we remain above the top of the broadening triangle there at 0.7 pence on an end of day close basis. If you look closely, you can see the 200 day line starting to rise. So it looks as though we're going into a golden cross, strongest part of the cycle. That's it for me today. More updates tomorrow.